And joining me now for a closer look at what's playing itself out in the market is Anthea Gardner from Cartesian Capital. Thank you so much for your time, Anthea. It is that time of the year, the last day of trading for this week, for March, and also for the first quarter of 2024. And really, it seems like one of the themes that I've definitely noticed that stood out for me is that investors keep buying the S&P 500. We had another record high yesterday, but really investors still seeming mute on the JSE, even though we have seen some buying in the last 2 days. What has your money been following this quarter?
Sure, it's the Nazi high. I think you forgot also the long short weekend for a while, right?
Yeah.
So long short for a while. And so it's very quiet at the moment. One of the things that I've noticed particularly is foreigners selling, which is a bit disappointing. So I think this little rally in the South African market is probably locals, buying ahead of month end and kind of deciding where they need to be. Bit of a shame, the rand much weaker.
Yeah.
I think the markets or traders and investors are a little bit anxious or disconcerted about where we're going with GDP, with inflation and interest rates. And it feels like a time of change in people's minds. So for a while now, we've been saying we can't see how the Reserve Bank is going to cut interest rates this year if they think that the average inflation rate for the year is above 5%. And guess what happened yesterday? They sounded very hawkish to us.
Yeah, indeed. And actually something that I noticed, apart from the rand weakening now just below 19 rand 10 against the US dollar, is that also when you look at those 5 major moves on the JSE now to the downward side, I did see the consumer stocks actually being a little bit punished. Sun International, Tsogo Gaming, TFG, Tiger Brands. And I'm wondering if that's also a correlation in terms of what the Reserve Bank said yesterday.
100%. So inflation is not under control, or it's not where the Reserve Bank wants it to be just yet. And so the risk that they may increase interest rates and squeeze the consumer even more has become real.
Indeed. Quite a shame, because I mean these are the stocks that we were hoping that investors would start actually going into when we were talking about interest rate cuts, but seeming that can is being moved further and further down as the year goes by. Anthea, not really a lot of company news out today, but there were quite a few updates from Renogen, from Zeda and the sort. Let's start off with Renogen, because it did come out with a quarterly update. I actually did see that share price was up over 2%. Of course, this is a stock in which investors had sold quite a lot of bad news in that share price. So giving us an update in terms of their production metrics. What do you make of the stock, and also just how investors have reacted to it lately?
I've been following the stock right from the beginning. And in fact, I know Stefano Morano quite well from our days at Morgan Stanley. And it's a stock that it had a lot of potential in the beginning. And when we started, it was very much an exploratory stock. So they promised they had all these gas reserves. And then it just didn't come as for the word I'm looking for you, as productive, probably as investors had hoped. And then, of course, they had to do the offshore listing, and Stefano moved to the US. And they had to do a rights issue or capital raise. And that scared investors a little bit. And I feel like investors almost ran out of patience. And so I think this update is actually a decent one. It kind of settles the nerves a bit. It looks like things are kind of going according to plan. No big issues. It's not a trading update, so we don't have numbers to show you. But I think a decent trading update.
Yeah. I mean, just with Renogen, what are you looking for at this moment? Because I know that the stocks or the company's fortunes hang on a lot of things at this point.
Yeah, there are a number of issues, and so you're looking for the production numbers to come through the way that they had promised, and for them to not have to spend more money before that happens. I think a very generic summary, sorry, but that's kind of where we are. And there are a number of little plots or gas sites that we want to see come online.
All right, I hear you on that. And of course, also there's this NASDAQ listing that we've also been hoping for, and quite a lot of capital also that the company still does need to get. There's also a smaller company, Zeda holding company. I'm not sure if you look at that, but we did get an announcement where basically they had previously announced the disposal of the Cape Span business, but there was the pommy fruit operations that they have at this point. So now saying that they are talking to third parties in terms of selling those operations to them. Did see that share price rallying about 4%. I mean, Zeda has been offloading quite a lot of its investments. What do you think of, the company, what is left, and also just their future prospects? And also, in terms of shareholder value at this point.
Zanati, you caught me with my pants down, as they say. But I haven't seen today's update, but Zeda is a company we've also followed quite carefully.
Yeah.
And very much aware of the disposal of assets. And you're always worried when companies are disposing of assets, because how are they going to generate revenue in future is the question. And I think with Zeda, there's two things. One, this disposal of assets, and unlocking shareholder value is probably more prominent than losing assets or revenue.
All right. Well, Anthea, before we get to your stock pick, let's reflect on some of the counters that have found favor with some of your industry peers.
I'm going with Netcare. Netcare has been a stock that has come under pressure, especially since COVID, where we saw, a stop in activity, but that has started to rebound, although we didn't see the margin rebound as much as one would have thought. So I think what you're going to see now is a lot of focus on cost optimization, the digitalization of some of the projects that Netcare has undertaken to reduce the workload, in particular for the nurses, freeing up time so that they can be much more productive. And then, you should see a recovery in occupancy levels. And on the back of that, I think some margin increase. They also got a very strong balance sheet, so they are doing share buybacks. They pay out a decent dividend, and you should see a decent overall return with regards to dividends as well as some capital appreciation.
For today, I'll pick Advotech, which is the diversified education group. And just looking at them in this world where qualifications are taking so much more of a premium, where some of their competitors are going out of business, but the demand for good quality education continues to grow. There are one South African company that's actually making inroads into the African market in a well-managed, predictable, successful way. And they also have their succession planning going on pretty well between the old CEO and the new CEO coming. They've been taken on by other competitors, and they've come out tops. So I think this is one where, especially if you've got kids in private school, it might be a good hedge for private school fees over the future.
I'm picking my own company. I don't often do this, but the share price has come back to 61 Rand. It just looks reasonable value at this price. I mean, I'm got no inside information. I'm a very small cog in a very huge machine. But, for the last 2 or 3 years, whenever it's got to 60, it's bounced back up to 70. And I think it'll do that again. You're getting a 6.5% dividend yield. There's plenty of capital. The bad debts are well provided for. It's just on a share price, it just looks too cheap at these levels.
All right, Anthea, so we've got Netcare, Advotech, and FirstRand. Just actually starting off with the one in the banking field. I mean, the banking sector has been one that investors have been very optimistic about with the high interest rate environment. But also, I mean, that's a double-edged sword, because at the same time as they're benefiting from the high interest rates, consumers are also under pressure because of the high interest rates. So what do you make of FirstRand at this point?
So, Nati, I feel like I'm a FirstRand cheerleader. I always seem to have it in my portfolio. It's definitely one of the better stocks in one of the best sectors on the JSE. Their ROE is excellent. They just managed to produce really good results non-stop. So they released results about, I want to say a month ago, maybe.
Yeah.
And they're a nice dividend payer, secure, easy, comfortable stock to pick.
All right. Well, let's get to another comfortable stock. Your stock pick, we have run out of time. Unfortunately, we can't go through Netcare and Advotech. But what is your stock pick for today?
So I'm afraid that I think equities are a bit out of favor at the moment, and we're really looking to the fixed income market. The 10-year government bond is yielding 12.24% at the moment. And I know I said earlier on that foreigners are selling, which pushes the yield up. But if you want to get out of it, then it's a bit more difficult. And there are only two issues with bonds or fixed income, I should say. And that is one, default. We don't think the South African government's going to default. And two, the mark to market. And so you're going to see a bit of volatility in your portfolio. But at 12.24% per annum, in the last 4 years, I mean, we're all talking about 4 years ago, it was COVID started. The equity market is up about 30%. So very simply, kind of on a compounding basis, that's less than 7% per annum. And for the bond, you're getting 12.24% and with very little risk. So I'm choosing the South African government 10-year bond.
All right. Well, thank you so much for your time and your analysis today on what is currently moving investors' money on the last day of trading for this quarter. That was your midday market update with Anthea Gardner from Cartesian Capital.